let's go through our list for Santa, or actually the list that Santa's putting together for us. These are the stocks and indices and sectors that I'm looking at for a Santa rally. Now, window dressing has commenced as of the first of the month, right? Window dressing is all month long, but that very punctuated, exaggerated potential move that we call the Santa rally is definitely a part of the last week of window dressing. So we ask ourselves, where is strength strong, and where is what are the sectors and stocks we want to avoid? And this brings us back to normalized performance. And I showed the normalized performance, I believe, last Friday. SMH, XLK, XLC, XLY. This is your magnificent seven, gang. Apple, Microsoft, Meta, Google, Amazon, Tesla, Nvidia. Right? Those are the sectors that have led the year. And those are your strength gets stronger sectors. So as long as the sector has liquidity, there are obviously viable options to be traded. Stick with those four, stick with the green stocks within each sector. So you might say, okay, Rog, what does that mean? Stick with the green stocks within each sector. Let's pick apart the number one weighted sector in the NAS. By the way, the NAS is absolutely valid for buy the dip and Santa rally. In fact, on the 20th, we bought 403 calls in QQQ with a December 2/2 expiration for $2.20. They were finally closed out for about $5.30 and change. So a nice move from $2.20 to about $5.30. Some traders made a little bit more. Some exited out of those options as they had time. But that's about the move. Now, gang, I'm not going to talk in percentages. Right? We're going to talk about what we bought it for and what we exited at, because as I like to remind my traders, percentages don't pay the power bill, right? We want to talk about real dollars per contract. So in this case, roughly $3 per contract in an initial $2.20 option where we risked 25% premium. Very good risk reward, fixed risk, fixed position sizing. And that's exactly what I want to do going into next week. Where though? Microsoft, right? Where else do I want to focus on strength getting stronger? Apple, AVGO, another strong name in the XLK, which is the number one weighted sector of the NAS. AMD, and I like Intel a lot. Now you'll notice AMD and Intel bring up another one of those strong sectors, and that's SMH. And by the way, as long as XLK, XLC, XLY, and SMH are moving higher, those are the main cylinders of the NASDAQ. Again, those four sectors have this magnificent seven within them at a high concentration weighting. All right, let's talk about SMH, right? Semiconductors. Are all semiconductors equal in terms of their structure? No, in fact, SMH itself is very buy the dippable. That should be a word. NVIDIA is not. Not that I want to be a bear here. Hear me out, gang. Not in any way that I want to be a bear, but look at NVIDIA struggling today, right? Who was not struggling today? Greener stocks in the SMH. Take a look. Yeah, AMD was down from its highs, but AMD made some ground, unlike NVIDIA. Intel, another green stock, very scalable, very liquid. Look at Intel punching up to higher highs. Gang, this is why we don't want to trade our favorites, right? Our favorite index, our favorite sector, our favorite stock. We want to focus on where the outperformance is. This is trade this, not that. One of these days, we're going to have a trade this, not that show, right? That would be an absolute help to those of you that are struggling to figure out what to trade. You know what direction you want to trade it. You might even know where you want to be focused. But the trade this, not that is the difference between a choppy NVIDIA and an uptrending Intel. All right. Okay, so let's move on then to consumer discretionary. This will be a really interesting breakdown because this has one of those I love it and I love trading it stocks. Probably the most popular of those, Tesla. When I look at XLY, consumer discretionary, Amazon's doing okay, and Amazon's the number one weighted stock here. We want to buy the dip. We want to focus on the daily price movement ranges, like on the 20th, right? And that's fine. But the real strength here is in lumber, is in burgers, and it was up until earnings and sneakers. We're going to talk a lot more about earnings going into next year, because one of the things that our mastery folks know, and one of the things our futures folks know, is that one of the reasons the XLY spun its tires today is because Nike traded down substantially. Gang, listen to me now, believe me later. The uptrend that preceded earnings in Nike is where you want to be a trader, not the binary scratch-off ticket of let's make a guess as to which way Nike goes, right? I think a lot of folks were very shocked to wake up to this move, yes? Unless they picked the top. Now let's go back. If you picked the top, why that top? Why not any one of the other tops along the way? Remember, gang, the clarity, the lower implied volatility is going to favor long calls, long puts, and that's really where we want to be. Let's be trend followers and leave the mosh pit of earnings trading to other folks. Not my cup of tea. It's okay if it's your cup of tea. It's my job to share what I do to manage risk and find opportunity, and that to me is that ramp up into earnings, not earnings itself. But that's why XLY struggled. Do I want to deal with Nike now? No way. What else could I look at instead? Well, let's go back to lumber, Home Depot, and more lumber, Lowe's. So McDonald's, lots of lumber, right? So McDonald's, burgers, and lots of lumber, Home Depot, and Lowe's. But here's where I said there's a stock that a lot of folks love, but it's not one that I would necessarily focus on, is Tesla. Do I want to short Tesla? I do not. Is Tesla in an uptrend? Equally, it is not, right? We're going to find better follow through in places that have the trend. That's what we say. We want to be trend seeking traders and then engage that. Now, if the overall tide is lifted, NASDAQ lifts the XLY, most of the stocks that are either neutral or bullish in the XLY will probably benefit. Yeah, but if we can take the best of, we're always going to be better off. Yeah, another sector, this is now into our S&P, which would absolutely be a buy the dip. S&P, SPY, led by the combination, the formula, which is if XLF financials are moving higher and XLK tech is moving higher, that is going to benefit the S&P. S&P is a buy the dip, absolutely. XLF, JP Morgan, Bank of America, Wells Fargo, Citi, most of the stocks in the financials are absolutely buy the dip, worthy as long as the open interest has at 500 or more at the strike you're looking at. There is not a single stock in XLF but Berkshire that is not double green in the top 11. So XLF and S&P, absolutely, let's focus on buy the dip. The last place I'm going to take everyone to is a little bit more Dow related, and that's the XLI. Do I want to buy the dip on the Dow? The Dow has come along quite well. Now, the Dow does have some things that are dragging it down, and that's the underperformance in healthcare and in energy throughout the quarter. I don't mean most recently, but throughout the quarter. So the Dow is valid for buy the dip. But what looks even better than the Dow in many ways is Caterpillar. Right? These are our Santa stocks, gang. Caterpillar, GE, and I would throw a fan favorite of Boeing in there, but it's legit in an uptrend, right? So we want to make sure they're not trading just our favorite stock, and we're focusing on Santa's favorites, and these are it. I hope it helps. If you have any questions, feel free to leave it below. As always, gang, thank you so much for being a part of the Simpler community. Happy Christmas. Looking forward to seeing you next week and next year, and for many years to come. Thanks as always for your time. Thanks for smashing the like button, and I'll see you in the next update.